Hello and welcome to another update video about Ethereum. This is supposed to be only a quick video. We should only take a look at the shorter time frame later today. With another longer term Bitcoin video, I will make also a long-term Ethereum video in which I will talk about the options on the medium-term outlook and also long-term outlook. So if you're a new viewer and you're wondering about the context, you can either watch or take a look at our long-term video playlist where we also have some all-time high targets for different coins and Ethereum. But you might just want to hang around just to wait for the next video and get a bit of context around this. But here, this is really just because we don't have much to add to the last video, just a refresher. But one thing changed in this triangle, and that's what I always mean with micro counting. We need to be open to some small changes. And this is now a very clear 3-3-3 pattern. I'm counting this as a WXY now. It's not a triangle anymore. It couldn't be a triangle anymore. Where you might be able to squeeze a triangle back in, depending on what happens now. But in the last video, I showed you this as a possible triangle, and the next move up as a possible, you could call it dead cat bounce. That's indeed actually not, well, that was sort of true, but it moved up a bit too high to count still this move here. Yeah, let me just show you that also for educational purposes. I think we counted this as an A wave of a triangle, this as the B wave, C, D, E. The E wave shouldn't have moved above the C wave high, yeah, to remain valid. I mean, let's be honest, we talk here only about, what is it? We talk about 20 cents or whatever, 30 cents, yeah, of such a volatile asset. But we have some rules, so we cannot officially count it anymore as a triangle, even though the wick, it was only the wick going above the previous wave. Now, what I can always do is to reset it, right? I could say, okay, this is the C wave. Okay, we are now doing the D wave and get one more high in an E wave. Now that's of course possible. I might go back to that. Yeah, so that's what I mean. We need to be on our toes with these micro patterns. Don't see them as fixed, rather see them as something fluid that moves with the price, just like a trend line would, or a moving average, just as an indication when a pattern can be complete, so that we need to pay a lot of attention for a possible breakout, in this case to the downside. Now a triangle basically got invalidated that way. However, we can still count it as a WXY. Okay, so that's why I often say don't try to be so exact or accurate in a corrective wave structure with the sub-wave counts, because most likely you could also count this in a different way, and most likely there are 2 or 3 options, and they don't give you really an edge in a corrective wave structure. Best what Elliott Wave is or can offer in a corrective wave structure is that you know the range, the key support resistance levels, the pivots, the invalidation points, and that you know it is actually in a corrective wave structure, which would often mean that you might not want to trade it at all, and you might want to wait for the breakout, and that you need to be careful with your position sizing, because they can seriously set you up for failure. They can screw you up, and if you're not careful about your position sizing, stop loss, then you can face a lot of headwinds, and you might blow up your portfolio if you tried to trade a range like that, and you don't know what you're doing really. Okay, so it's easier to trade impulses than corrections. Okay, obviously you can always trade the range extremes, but that's just a different type of trading than trading an impulse. Yeah, where you might just hop onto the trend and you just buy the setbacks and sell into resistances. Okay, but yeah, looking at this as a WXY, still waiting for 1 or maybe 2 more lows to signal the onset of the 5th wave. We need a break below the X wave low, which is at 1555. And target-wise, if we measure this as a wave 3 down, as a wave 4 up, then we're looking now for a breakout and a possible target that could be reached. First target is the 61.8. Let me just do that again. Let me just double check that. No, see, it didn't measure that correctly. So looking at that, going to the low. So different ways of measuring. Okay, so first way of measuring would be I take just the length of the wave 1 here, of the white wave 1, go to the high of the 4th, first target around 1525, the 1-to-1 ratio. Then I can also measure it in a way that I say, okay, I measure 1 through 3, go to the high of the 4, and then it gives me several targets, the 38.2 extension at 1530, and 1500 is the 61.8 extension. So these are sort of short-term targets, but eventually we've got very strong support in the region down here between 1490 and basically 1400. So that's my area at the moment where I'm scaling in. Did explain that in previous videos, because we could just get one more low and it can turn to the upside, or we can get two more lows into deep into the support region, and we should then see a reaction. Can I promise you we see a reaction? No, of course not, but it's all about likelihoods and probabilities. And as per my wave count and a couple of other wave counts I'm observing, we should see some reaction to our support area down here. We also have the previous wave 4 low there. We forming a trend continuation pattern to the downside, targets point into this direction. It could be one more low or two more lows. Yeah, that's where we are. So at the moment, as long as we stay below 1601, which is sort of the, let's call it not really invalidation point, but it will make a wave 4 very unlikely, because wave 4 would normally not retrace more than 50% of the third wave. If we break above that level, I would not count this as a wave 4 anymore, and it would increase probabilities for other patterns, for example, more bullish ones. That's why this level is so important, the 1601 level. But yeah, at the moment, trend is still down, and my view is that it is down and that we will come down further as long as we stay below 1601. That will be our signal level. So any sustained break above 1601 will signal to us that the immediate downside expectation is not going to happen, and that we can look at a more direct breakout to the upside. In that context, it's very important to understand that a lot of the altcoins have reached their support areas as well, and a lot of the altcoins are currently in, I would say, medium-term trend reversal areas, where we could be looking at an altcoin rally in the next few weeks if the expectation works out. And if we see a lot of the altcoins bottoming, and we can expect some kind of a reaction in the next few days or weeks, that might also hint at Ethereum and Bitcoin could also be very close to their low here, which is also what I expect, yeah. It's just that sometimes you need to be prepared for everything, yeah. It's a bit like chess. I sometimes compare it to a chessboard, where you need to be aware of the different options, the different scenarios, and you need to think about your strategy. Charts are much more complex than just, on trading and investing is much more complex than just thinking about, is it going to go up or down? And do I just make my decisions based on what the chart does? Or do I actually make my decisions based on what the chart could do and should do? Rather, should do, not could do. Do I make my decisions based on what the chart should do in 2 or 3 likely scenarios? And also what my portfolio includes, where's my risk, and so on. Okay, that's my update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.